Hey guys, and welcome back to this little update or recap ahead of the FOMC news release. Because the indices, the index market has already moved quite a bit in the last 2 days. So starting on Monday, we already close above our 50% of our bearish fair value gap right here on the daily time frame on the S&P 500. So that's already done. And then on Tuesday, we continued to push above our daily bearish fair value gap, and also not just that, we also closed above our daily volume imbalance right here. We closed above the consequent encouragement, above the bearish fair value gap, which should now in reality be a inversion fair value gap. So yeah, really all eyes should be on the high of the year here on ES, because if we head over to NQ, can see that the high of the year has already been taken, and if we head over to YM, we're also cleared that high of the year already. So that's why I want to see ES to basically catch up with all the other indices. Let me get rid of this line. And I wouldn't say it's unrealistic expectation. It's only a 28-point move, and usually during an FOMC news event, we move at least 100 points on ES. 100 points? Or let's say an average of 80 points, but usually that's what we could assume. And being only 38 points away from that region, and now if we drop it down to a lower time frame, we see the consolidation right here. So yesterday during the AM and PM session, we had the rally back to the upside after the initial dump of the CPI news release. We moved to the upside, and right now all we're doing is we're going sideways above the previous day's high, and we're holding that very strongly. I mean, yes, we took out the Asia session high and low, but we didn't really expand above or below it. We just expanded it by maybe 1 or 2 ticks, but so far all we've been doing is accumulate. So just a wild guess, what I could see happening is a accumulation, and then later on 2 p.m. FOMC manipulation, followed by a distribution to the downside. Just a wild guess that I'm throwing out here, because we can obviously see the accumulation phase. Now the question is, what are they going to do? Are they initially manipulate traders to go short, to take it up with 8:30 PPI news and 2 p.m. FOMC interest rate decision? Or are they going to take it up first to then take it down? Or are we just gonna chop around until we get FOMC news? Of course, chopping around is always a possibility. Just pick whatever you like the most, if you even consider to take trades. I mean, yesterday, most of the time, the best way to play this is maybe only trade the AM session, or those last 2 hours of the PM session. So let's say from 3 p.m. New York local time until 4 p.m., so the power hour basically, or after the market opened. Like for example, yesterday we had the CPI news event. I wasn't really interested in trading or forecasting of where price is going to go. I'm much better at reacting. And that already brings me to my topic for today. If you look at yesterday's price action on the 1-minute time frame, stop assuming you know what's going to happen. It's not beneficial at all. Use your higher time frame areas. Here we had the daily volume imbalance, the midnight level, and our daily bullish fair value gap, bearish fair value gap. But let's hide that for now and see what happened right after CPI news. We moved to the upside. Where are we here? Where are we at right here? Yes, the high of the daily candle. Always think in terms of power of 3. What does the daily candle look like right now? Okay, we're moving away from that. We have 3 wicks to the upside. All right, we're getting a nice momentum candle with no wick to the downside here. Okay, we continue with that momentum, and we actually managed to close below the 50% of this wick. And that already led me to believe that, well, I think the odds are in my favor that we're going to see a reaction of either the lowest or the highest bearish value gap. Then doesn't matter what my expectation is. I don't care about that expectations. I enjoy going with the flow, and going with the flow really enables me not to force something just because I'm stuck with my daily bias, which oftentimes leads you to, let's say your daily bias is bullish, but the market just keeps on trending further down, further down, further down, and you try to trade every single reversal opportunity, sometimes even force a reversal opportunity because you've already lost 2 or 3 trades and you want to make it back, and now it has to happen just because you're sticking to your daily bias. And averaging a 50% win rate even with your daily bias, well, I think, at least for me, that's what I discovered. I'm much better off simply going with the flow. I still have my daily bias and my daily targets, and if I see them align with my order flow analysis or my price action analysis that I see on the 1 to 5 or 15-minute time frame, it's simple. What do? I add more size to my positions because now I have my daily bias aligned with my order flow analysis. And that's exactly what happened right here. We filled our daily volume imbalance. 830 came in right here, had a wick to both the up and down side. Okay, we're starting to top here. It doesn't look like it's going to continue. All right, let's just see what's going to happen inside these fair value gaps. And what I did is I placed my limit order right here, my stop just above this candle's high, accepting the risk here. We had very easy targets. We had equal low sell side right here. We had London session sell side right here. Now we already cleared that just before the New York session. We had Asia sell side untouched, so London didn't take out Asia sell side, and we had our low of the daily candle right here. This gray divider divides lower time frame into daily candle sections with the ICT all-in-one indicator. And I said, okay, we finished business to the upside. We trapped likely traders long, news traders who were looking to trade a breakout whatsoever. I don't care. Right now, I still have objectives to the downside. We filled our daily volume imbalance. We leave behind bearish inefficiencies. And to me, that's worth the risk to look for a scalp for 10 points, not looking for a 20 or 50 point move all the way into my weekly objective. That's not how I trade. You can trade that way, but well, your win rate is going to be much lower. And I simply go with the flow. And what do I mean by that? I place my limit order most of the time at the low of the fair value gap, since I'm trading recently on my new Funding Pips account right here. If we look at my Funding Pips challenge, so far the best CFD prop firm I have ever traded with. They have the lowest spreads available for the indices, 0 commissions. You have a 10% static max loss limit. So comparing that to Take Profit Trader or Apex Trader Funding, you have so much more room to breathe. It's incredible because here you have a $3,000 profit target and a end of day trailing drawdown of $2,000. And here you only have a $4,000 profit target, but you're able to lose $10,000. So you have much, much, much more margin to play with. That's why I'm really excited now. Not fully going back to CFD challenges or to CFD funding with, for example, Funding Pips or FTMO, but well, just want to see how much easier it is or how much less stress it is to not have to worry about your, with Apex or Funding, live trailing drawdown or your trailing drawdown at the end of the day overall. Because right now, potentially, I'm up $1,500 on the 50K challenge. I'm $2,500 away from reaching my profit target. So I'm pretty much 40% there. Also, very nice dashboard here with Funding Pips. You can't complain about that. You don't really need a trading journal at all. It shows you all the information you need. But anyway, to the point, I would be able to lose $2,500 today and my account is still not gone. As long as I don't breach my daily loss limit right here. So if I would lose 2,600, yes, the account would be gone. But at least if you stop before that, you still, right now, because it's a static 10%, only if my account balance goes below $4,500, $45,000, my challenge is gone. And I really like that, because now with Take Profit Trader or Apex, my drawdown would be moving up with my account going up as well. So yeah, but enough about that. Let's head back to TradingView and take a look at this example right here. The way I manage these trades, it's really simple. If I get my entry on the slowest fair value gap, it works on ES mainly because ES is more precise and moves slower than NQ. That's why I prefer doing it on ES. I enter on a bearish fair value gap, and I have a specific plan in mind. My plan is that if I see a single candle close above my entry bearish fair value gap, I'm gonna take off some risk. I'm gonna take off 50%, or maybe even close the entire positions, depending on how many contracts I'm in with. Depending if we have another fair value gap above right here, I would rather close 50%, because I see and I understand we have another bearish fair value gap just above us. If I would see the close above the 50% right here of this bearish fair value gap, I would very likely be out of this position overall, and maybe have another contract that I entered on right here. Once I see my second invalidation, which would be a close above this bearish fair value gap, I'm completely out of the trade. I don't care. That's the way I manage my trades. Sometimes, yes, we close above and we still continue lower, but that's not worth, probability-wise, maybe 3 or 2 out of 10 trades. And to me, that's really not worth it, holding on to the risk just because 2 or 3 out of 10 trades close above and still work out. And that's how I can keep my losing trades very small and my winning trades, yeah, at least smaller than my losing trades. And that's really what it's all about. And it's also a good mechanism for me, because I used to be afraid to take an entry. And if you feel the same way, well, what helped me, my advice would be to, trying to find a workaround where you're still taking on the risk. Like, for example, I did yesterday just after CPI, but I'm quick to enter, but I'm even quicker to exit my trades. That doesn't mean I'm jumping in and I'm jumping out on the same candle. I have my rules in place that would confirm or invalidate a specific setup. So right here, I can enter into this trade here without much risk at all. So limit order right here at the low. My stop loss, usually I use a safety stop loss, but because yesterday was CPI and we've been a little bit more volatile, I placed my stop right up here. If I see the candle close above my bearish fair value gap, I already have my first inversion fair value gap here to the downside that could potentially hold support. And this doesn't make sense to me at this point anymore, because I wanted to see bearish order flow off this area. But now I'm kind of in between, because now we inverted the fair value gap. Conflicting biases basically. So that's why if I would have seen a close above here, I would have exited the trade with a 2.5 point to, let's say, 3.5 point stop loss, instead of taking the full hit at 7.5 points. Only in a very rare case where we get a huge fuck you wick stopping me out, well, then my safety stop loss is being triggered. But 99% of the time that's happening, very rarely. And then we can continue taking price lower. We hit the low of the day. We leave behind a new bearish fair value gap, lining up nicely with also a, where are we at? Let the ICT all-in-one indicator load up with the new day opening gap to continue even lower. Of course, we already hit a major sell-side liquidity pool. I didn't take the continuation short right here. I was down once I hit that sell-side pool. I was happy with that. We continued lower, and then we actually jumped on the New York session live stream on my YouTube channel, where I stream live every day, just after the 9:30 open. And that's when we started to look at the price action after the open. 9:30 open up, we continued lower, 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 and then we saw how price slowed down here. We then continued lower. We had more targets to the downside, the previous day's low, this orange line from the ICT all-in-one indicator, and 2 new week opening gaps. But anyway, we started to slow down, and then we saw some movement to the upside. But because we had no fair value gaps here on the 1 minute time frame, not on the right side, and only one here on the left side, I decided to go up to the 5 minute time frame and see what we're working with here. And then, once again, if my bias would have been, we are going to that previous day's low, CPI is going to put in a high of the day, I would have tried to short. Every time there would have been maybe a 1 minute, just a tiny bit of a confirmation for a potential short, because based on my assumption, high of the day has already been formed. My daily bias is bearish. Now it's going back up again. You can always find a reason to enter a trade. There are infinite amount of reasons out there. If you have your bias and you really, only focused on that, disregarding order flow, and that's what I really like using this approach, because yes, my daily bias starting out for the day was filling in the daily volume imbalance and then continuing lower. But because I'm quick to change my short-term bias, I'm able to actually adapt and even take longs, even though I have a bearish daily bias. Because right now I could argue that my daily bearish bias has already been delivered into. We left behind this 9:30 a.m. bearish value gap and we push above it. And what happened right here? We closed above our lowest 5 minute bearish value gap. And if you watched the stream yesterday, that's where I entered long. I once again had a 7.5 point stop loss. We had a bullish value gap below us to also potentially support price. And I was just targeting a 8-point target right here, this buy side. And I was already done for the first trade that we took during the live stream. On NQ, we actually caught a 2022 setup, also at the low. But this is how I also don't have to be afraid of the setup to fail. I'm not sure how to explain it. I've been asked that question so many times. How can I be confident enough to take this trade? And I'd say the confidence for me really comes from knowing that I'm not going to blow my account on this particular trade. If I use good risk management and I have a reason to believe why we could continue into this tiny little buy side target here for 8 points, then there's really nothing to be afraid about. Of course, I know we always have that little fear once we start risking money that it might go south and it hits our stop loss, but that's why I have my active risk management technique in place in order to protect me. And going with the flow, back at that point in time, I was focusing on the 5 minute time frame. What did we have? Okay, we close above, we hold support on our inversion fair value gap, and we move away from that. So at this point in time, I already saw the reaction that I wanted to see of my inversion fair value gap. Okay, that next 5 minute candle actually continued to go up higher. And where did we close? Exactly above this bearish fair value gap here on the 5 minute time frame. We're almost back to our old area of where we saw resistance at the new day opening gap. Okay, right now we're hesitating, but I'm fine. I can argue that once we close below this bullish fair value gap, I could exit my position because that wouldn't line up with my continuation idea. And only if I see exactly what I'm anticipating on the chart, I'm staying in the trade. Following order flow, framing my overall narrative using fair value gaps, ICT concept, basically just, common sense most of the time as well. And that's what led me to take another winning trade right here. And then we continued higher without leaving behind major fair value gaps. At this point in time, I kind of started to doubt that we're gonna take out the CPI high wick. But during the live stream, we drew up this fair value gap. And just to prove the point, I decided to take on the risk. I entered right here at the 50% level with my safety stop. And I'm calling it safety stop just so I know that, okay, worst case scenario, I'm going to lose 4.5 points. That's not bad at all. I'm not in with 10 mini contracts. I won't blow my account on this one. I don't have to be worried about a single thing right now. All right, what happened then? I said that if I see the close below, we have the midnight level here to support price. We have the previous day's high to potentially hold support. We also have that last level of defense, which would be the new day opening gap. Now, after being used as resistance, now potentially could be used as support, paired with this bullish fair value gap. In my eyes, nothing to be afraid about. And I keep telling that myself to make sure I'm not afraid. We get a perfect bounce off the midnight level, but we consolidate for solid 1.5 hours almost. And then right here, I managed the trade and I took, so let's say we wouldn't have continued further to the upside and we would have actually started to drop, take some short-term lows, for example, this one right here at 467, 6.5, or this 10:30 a.m. low right here, just to pick up some stops before we continue higher. Once I saw the close below A, the midnight level, B, our bullish fair value gap right here, and below the previous day's high, this was my major support level, and before I entered the trade, planned that once I see the candle closing below, I'm gonna exit. Keep in mind, bodies tell the story and wicks do the damage. That's why I have a safety stop loss here, because we could just wick this area and the candle still closes somewhere inside our bullish fair value gap. So right here, once the candle closed, I took a loss of 1.75 points, and that's manageable. And that's why the majority, 90% of my stop outs are much less than the initial risk that I put on, because I'm actively managing my risk. So right here, I lost 1.75 points. And then I was curious, we had a bullish volume imbalance. Well, what's this? This is a bullish engulfing, a pin bar with no wick to the upside, closing right back at the high of our bullish fair value gap, which theoretically now would be an inversion fair value gap. But because I like the momentum, and it's also, if you look at the time, keep in mind, time always comes before price, 12 a.m., new hourly candle opens up, first 5-minute candle, picks up some stops below each and every one of these short-term lows, and then with the next 5-minute candle, we immediately displace that, open up with a bullish volume imbalance. I took a entry right after that with my stop loss, with my safety stop loss below here. And then I just follow momentum. I was looking for a quick 5-point target, not looking for much, 5 points. They get the job done. If you trade with one mini contract, that's $250. And I think you can't really complain about making 250. We already made 8 points right here, and we took the short initially. We took a tiny little loss, and that's exactly what I mean. My losing trades are much smaller than my winning trades because of that active risk management. Unless, of course, my safety stop loss is hit, but it's also still manageable. 4.5 points as a safety stop loss. Some people would use a 15-point stop loss as a safety stop loss because, yeah, maybe it's going to bounce off somewhere down here and hopefully it's not hitting my stop loss. Doesn't make sense to me. That's why I never, used that approach. I have still a very tight, compared to most other traders, safety stop loss, and I have specific rules and areas that serve me as points of invalidation. Right here, entered right here, 5 points hit, done. We come back down to retest our inversion fair value gap. At this point in time, I was looking at a potential order block right here, just curious to see if that might have been enough and we now get a potential market structure shift. Not enough for me to enter short. So even if your daily bias would have been short, please show me one opportunity where you could have entered short. Maybe here, okay, I take that. So let's say we formed this short-term low, we close below for a potential market structure shift. You would still be missing the bearish fair value gap that I like for my entries, because then again I can use the fair value gap to invalidate or validate my entry. Once I see the close above below, I can exit or take off some risk. I've been watching, all right, we keep holding that 50%, and then once again, new hourly candle, it's 1 p.m. New York local time. get a push to the upside. We have buy side right here and buy side above this on the 1 minute time frame, short term high from 835. All right, this fits in with my narrative. New hourly candle. We didn't clear the buy side before we retraced into this 5 minute bullish fair value gap. Place another entry right here on this candle or on this fair value gap. Safety stop loss, 5.5 points, not really necessary. But main point is, do you have to be afraid of taking this trade? No, not at all. Our 5-point target is below the 830 opening level. So another easy 5 points to catch. And once we see the close below our bullish fair value gap, we take off risk or close the position completely. So instead of losing, my safety stop loss really would have been 3 points in that scenario. If I would have seen that fail, there's no point in giving it more room to breathe to the downside, in my opinion. I have a very specific scenario in my mind if I take this entry, and that would be this bullish fair value gap to hold support, to deliver higher into my 5-point target, and that's exactly what happened. And we can repeat this process over and over again. Screw my daily bias. My daily bias was wrong. I'm not trying to force something, and that used to be my biggest issue back in the unprofitable days, because my daily bias was bearish. I was going to the 1 minute time frame, 30-second time frame, looking for that next short opportunity because we're going up, oh, we're going up, we're going up. It has to go down eventually. Well, that never happened. And simply by using this approach, I'm able to follow price. And once again, bullish fair value gap. Do I have to be afraid to take an entry here? No, not at all. I have my safety stop losses of 4.5 points. And if this candle would have closed below, so let's say, for example, right here, my stop would have been around 1.5 points. 5-point target, once again, hit. So that's the way how I can keep on farming these 5-point moves. And they're really easy to farm once you learn good risk management. And once again, we leave behind a bullish fair value gap. Okay, right here, we didn't fill this one, but we certainly filled this one, kept holding support. This is past, no, that's actually the power hour, 15:35, so at 4 p.m. That's usually when you have to close your positions for Apex Trader funding. Let's say, because we had a very good day, use a safety stop of 5 points, and only if, usually pretty risky to enter before those last 10 minutes unless you have a very good draw on liquidity. For me, that wouldn't have been good enough. We just took out the high of the day and we started to pull back. Most of the time, it's very unlikely that we are not going to retrace back into our range after hitting a major target. We retraced a little and yet still ended up holding support. So taking these entries, let's say prior to the London Open, 8:30 news, and the New York Open, or let's say just those last 10 minutes before 4 p.m. of the power hour, I wouldn't recommend doing that because the probability in those cases is higher that your safety stop loss is going to be hit. You wait for these times to pass, wait for your setup, and then catch a lower volatility entry where the probability is much, much, much lower, that we're going to see a huge wick saying fuck you, hitting your stop loss basically. That FU wick. We don't want that. So we simply avoid those times where they happen most oftenly. Like for example right here. Oh yeah, we have this bullish value gap. It's just ahead of CPI news, so yeah, let's actually try that right here. And if it closes below, I'm gonna get out of my trade. Well, the volatility just hits your safety stop loss and you don't even have time to act on it. So not really worth it in my opinion. But we can see that even though I had a bearish bias yesterday, very likely like many others, I'm still able to ride the trend to the upside. And I don't have to sit here being terrified of my trade. Okay, now it's in profit. Don't have to hold for ages. I'm also not the expert in holding trades. I'm not a swing trader. I look for my quick ins and outs with surgical precision to get what's mine. 5 points is usually my low-hanging fruit target, and then the next target would be buy side. 1, 2, 3, 4, 5 winning trades in a row, and exactly the same thing happened yesterday or on Monday. Of course, during choppy market conditions like we saw, for example, today during London, Asia, London, we're still chopping around. We didn't expand back above this buy side liquidity where we're just ranging. This doesn't really work. Okay, now the question lots of people might be asking is, how can I tell that we're going to chop? Well, if you watch, for example, my weekly outlooks, I said on Sunday that I'm going to risk 0.5% of what I usually risk. So half of my usual risk for the London session because of CPI on Tuesday and FOMC on Wednesday. We're very likely going to see just London session messing around. And that's exactly what we saw today. London session messing around. That's what we saw yesterday. London session messing around, not really moving anywhere. And that's what we saw on Monday. Anyway, we still ended up making profit with our VIP members inside the trade idea section and the tape reading section where I'm active every morning. For example, this morning I have been looking at this potential. Where are we at? Potential 2022 model right here, market structure shift prior to the London Open. We saw it retrace. We already started to see it chop around, and NQ actually delivered perfectly into buy side. So knowing that we could see potential SMT divergence here and still continue up higher, I decided to widen my stops. Like right here, we swept the low and immediately moved to the upside until we eventually, keeping everyone up to date here, hit my Asia buy side target. And because I'm already anticipating a ranging market during the London kill zone, I don't have a 10-point target. Trying to force 10 points in unfavorable market conditions. Alright guys, and that's it for me. It's a 32-minute video. I hope you enjoyed it. I just wanted to spill my guts basically on the topic on like how I manage my risk, how I manage my trades, and why I believe that having a daily bias, especially if you're very stubborn by nature, like I am for example, is most of the times less beneficial than simply going with the flow. And one last thing that I want to say is that going with the flow really helps you to be in tune with what's happening right now. Back in the days, I've been looking for market structure shifts that happened, like for example right here, we run away from that, we slowly creep our way back into the upside, been looking for market structure shifts or for a potential 2022 model that happened 2, 3, 4, 5 hours ago, or maybe even from yesterday, and it always caught me by surprise why it didn't work out. And now I know the answer, because what happened right here, the entire world can change between this movement to the downside and the push right through it. Everything can change. Maybe market makers have already distributed their profits, switching over to longs. That's why the setup didn't play out. And going with the flow allows you to disregard what's really going on in the bigger picture. Of course, it's still, don't get me wrong, important to know what's going on the bigger or in the bigger picture. On a daily time frame, look for your areas of rejection. And it's not like I'm going to get in long here, holding all the way until we hit the buy side. I'm taking my scalps. Okay, here a nice little 10-point scalp. We hit our 2022 model area somewhere around this and reject a little bit, but yet we still continue higher. So I maybe hit a stop right here, but I still can continue to go with the flow, because right now, why is this pushing through? Why is it not respecting old bearish order flow? Because right now we are in bullish order flow. And I only care what's happening right now for my entries. Maybe if you're more sort of a swing trader who places his or hers 15-minute time frame entry or 1 hour time frame entry with your fixed stop loss, then you wouldn't have to worry about this. But if you're scalping on the lower time frame, like the 1 or 5 minute time frame, I can only suggest you trying that on a paper trading account and see how it performs. And yeah, that's really the best advice I could give you. Focus on what's happening right now and scalp. Look for your 5 handles. And once you captured your 5 handles, switch, let's say, for example, on your funded account, switch back to your paper trading account, bank those $250 and get on going with your day, or keep on trading with a paper trading account. All right, but that's gonna be it for this video. Make sure to check out the affiliate links below to support the accumulation zone. For funding pips, there's a special 5% discount in the description. They already offer the cheapest CFD challenges in the industry, and initially I thought there has to be a catch with it. So far I didn't find any catches or strings attached. Basically, they have the best spread, almost zero slippage. I don't have anything to complain about them just yet. Maybe if you take an entry prior to the FOMC or CPI news release, you might get screwed around with your stop loss. But well, being a good risk manager, you should already know that that's not something you should be doing. So I can only recommend funding pips. If you want to sign up with them, feel free to use the affiliate link below for a 5% discount to save even more. Or if you prefer to trade futures, my prop firm of choice is Take Profit Trader. They currently offer a 50% discount for life and an extra account for free once you pass your first challenge. And that discount has been going on for over a month, so make sure to capture this and use the 50 and free discount code, also by using my link in the description box below. Alright guys, I'm gonna be excited to see what's happening for the FOMC news event. I'm gonna be streaming during the New York AM session, so until then, take care and enjoy the rest of your day. Bye.